Like now we have opportunity. We're seeing this happen in real time. Do not be that person watching this happening, like complaining and not doing anything. This is the time that you accumulate these assets. When it's on sale, this is when you buy. Okay? There's no more excuse saying, "Oh, I didn't know." There's no more excuse. There's too many people saying it. We're saying it right now. If you're listening to this, you're hearing it. It's time to take action. Please don't be that person sitting on the sideline.
What's up, family? Welcome back to another episode of Investors Playbook. As always, you have your co-hosts Deshaun and Cornell. And in today's episode, we have to talk about the Trump tariffs that happened last week. We're talking about Liberation Day that happened on April 2nd. So sit back, tune in, and soak up some of this information. Cornell, how are we starting this episode, man? What are we hitting on first, bro? What exactly happened last week?
I think essentially what we have to talk about is how badly the market crashed. Just over what was that, Friday and Thursday? It was
Yeah,
terrible. The tariffs came out at the end of the market on Wednesday. So pre-market on Thursday looking terrible. Also the entire day Friday looked terrible. I know year to date, as we're recording this, the SPY is down over 13%,
that's
which is
crazy.
yeah, because as you know, like SPY is like based on historical data, the SPY has gone up about 10% each year, right? Right now, year to date, it's only April. It's down over 13%. So basically, it erased almost a whole year. Well, pretty much a whole year of gains for the SPY. So I think that's an important topic to talk about right now, for sure.
Definitely. Yeah, and I mean the Nasdaq follows suit. The QQQ, the ones that we could trade, that is down 17% year to date, with a large chunk of it happening over Thursday and Friday of last week. So yeah, this Trump tariff news, and we're going to dig into exactly what he talked about, but it has hit the stock market pretty hard. Uh, a lot of downturn, and we're not talking like moseying down. We're talking straight, like straight line down to the, yeah. So essentially, what happened last week is Trump announced that a lot of tariffs are going to be placed on countries outside of the U.S. We're talking about imports, exports. But I think one of the it was a lot of tariff announcements, but the 10% universal import across the board, yeah, don't matter who you are, 10% on every country, every single country. And we know that the U.S. is not a huge exporter. We are a major importer. A lot of what we get is out of the country. If you look at your tags or the bottom of your cup, it's probably going to say made in China, made in Mexico, because not a lot of items that we purchase are going to be made in the U.S., right? Um, Something else that's getting hit huge is car manufacturers, auto manufacturers. When you look around at the cars that are driving around outside, a lot of these vehicles not U.S. manufacturers, and if they are U.S. manufacturers, they're not getting their parts from the U.S. So they're still going to be hit with this 25% auto tariff that came out last week as well. So yeah, it's about to get very expensive for businesses to do business, and that caused a huge amount of fear um, in the stock market, which caused that drop on Thursday and Friday. What's going to happen next week? I mean, we don't know for sure, but given that these tariffs are here to stay and they're just going to continue to be more into effect, um, I think that we could see some more downside. But the question is, if that is the case, what do we actually do, right? How do people navigate this? Um, the way the market is moving now, how do people even find opportunity, right? It's a lot of fear in the stock market right now. But yeah, Cornette, what you think, man? Is this actually an opportunity, or should we sit on our hands? You feel me?
I think no matter what's going on, there's always opportunity somewhere. There's a lot of different ways that people can play this. If you're a safer investor, you're not really into risk like that. What I would do is I would dollar cost average. As it's going down, you continue to buy. Every time you get paid, just put something into the market so that you're not trying to time the market like, okay, I'm gonna wait for the market to drop all the way down, and then when you put all your money in, it drops even further down. So it's not about timing the market. You want to continue to put money in so that you're getting the full drop. You're accumulating those shares at a lower price so that when it recovers, you're back better than ever. And then for my riskier people, what I would do, and I've been doing this on my end, I've been playing puts on the market. So basically, this is where I am signifying where I think the market will go, how low it will go, and I'm putting an expiration date on it. So if it moves closer or it hits my target price, I'm actually gaining money from the market going down. But what I want to let everybody know, this has considerable risk for sure, because if it gets to that date and it's nowhere near the price that you have signified, you can lose all the money that you put in there. So this is for the people that are okay with more risk, but I would only do this with a small amount of money. Please do not get your whole portfolio, try to YOLO it, and think you're about to become a millionaire overnight. Let's be sensible
Yeah.
about this.
No, that's some solid advice, man. I especially think that the dollar cost averaging aspect of it makes a lot of sense. I don't think that sitting out of this is something that anyone should really do, unless, like you said, of course, you don't have the means to invest right now. If you have the means to invest, then yeah, dollar cost averaging is a solid strategy. Um, that way, you are catching any sales, and if it continues to go down, then you're averaging your position by buying lower prices over and over again. So I think that that is 100% a good strategy. Something else that I want to mention is for those people that trade, right? You know, I've recently started my trading journey. Something you might want to pay attention to is the volatility indicator, or the VIX, the VIX. The VIX on April 3rd was at 2145. By the end of April 4th, it doubled to $43.85. Now, the VIX pretty much, the indicator for the VIX is this is kind of like a fear meter, right? It's almost like as the VIX shoots up or as the VIX increases, there's a lot of uncertainty and fear in the market. And it correlates to the SPY. As the VIX goes up, the SPY tends to go down. Um, and with it shooting up so rapidly, I mean, that of course just tells a story as to why the S&P or the SPY went the way and moved the way that it did. So going into next week, if you are a trader, um, pay attention to the VIX. And if you're starting to see that the VIX is cooling down, maybe rethink a strategy. If you want to just play, sell contracts to the downside, you might want to rethink it if the VIX is doing some cooling down. Because right now it's at 43.31 as of today. So yeah, just a couple of strategies. I think dollar cost averaging is good. I think paying attention to the volatility indicator is good if you are one of those, day traders. And I think something else that we want to talk about, right, is what are some what are some different sectors that could be, potential moves, right? I know a lot of this tariffs are talking about trades, but what about the actual companies that exist in the US? You think any of those will be a good play, like straight US buy in the US, sell in the US, made in the US, produce in the US, do you think any of those would have like a competitive edge when it comes to all this tariff news? Or any of like the stock market money will start flowing into them?
Uh, I think that I think maybe things like Netflix that
Mm,
don't really have a an item that they're
like a
selling that
physical
needs to be
product?
shipped. Yeah, they don't have a physical product. I think maybe businesses like that will thrive during these times. I also think that, and I'm not really sure of all the businesses that are strictly US and they get their parts from US, but I know Tesla and I think Rivian, I think we mentioned that in the last one,
Hmm.
that they have an advantage because their parts and they're built within the US. So, what about you? What do you think?
No, I agree. Outside of just what I had mentioned, like about them being strictly U.S. stocks, yeah. If a country is not, I mean, sorry, if a company is not exporting or importing anything, and it's all digital assets, like they might be good. You know what I mean? They don't have to ship anything. They don't have to put anything in cargo. They don't have to. I don't know if tariffs affect digital assets. I don't think so. Right.
I wouldn't see why it would.
Right. Right. So yeah, I think you might be right. Um, Anything that is strictly digital asset, like entertainment, um, I can't think of any of the other ones right now, but there are plenty of. Go ahead.
But I don't think this is a death sentence for businesses that are affected by the tariffs cuz you got businesses like Microsoft, Apple, Nvidia that will be affected. But the thing is, these businesses are too necessary to just be wiped out by some tariffs. You see what I'm saying? Every computer that we have, well, most computers that we have are either Microsoft or Apple, the iOS. You see what I'm
Yeah.
saying? Microsoft, they have the Xbox, they have the cloud, they got the whole Gmail suite.
Hmm.
Um,
Yeah. I think
Apple, they
where
got
those.
the. Go ahead, my bad.
Well, I was about to say where those companies are going to get hit, like even with the Netflix, right? They still need processors. They still need microchips. They still need electronics to have their platform running. I think that is probably where they might get hit, right? If they're importing chips from China so that they can run their databases. Um, that would be it, though. Their product itself is digital, but how they manage their product, that might be where they get hit with imports, if at all. I don't know what makes Netflix data, a data lab. I don't know. But if they are importing any of those chips, processors, any of those devices, that's where the imports are probably going to hit um, those companies. But yeah, to your point, these are massive companies, right? What I do think might happen is we will see an increase in prices on some of the things that we view. We might, Netflix has been raising prices by like $1 every year or so, every 2 years. Um, we might see that. We might see delays in like the iPhone because they might want to rethink their strategy on how much it's going to cost for them to build the next generation of iPhone. Stuff like that, I think, is what we're going to see. Um,
Right.
yeah. But ultimately, yeah, I think that when it comes to all this tariff stuff, the one thing that we have to remember when whether we're investing, whether we're trading, or whether we're just watching, right? Which, we say get off the sidelines. So again, if you are just watching, probably think of a strategy where you can find a way to get into the stock market. Um, but what we want to drive home is to not let emotions drive any of these decisions, right? You can't let fear prevent you from becoming an investor, and you can't let fear, like the fear of missing out, make you ruin all of what you built, right? So don't go ahead.
And like just on the other side, man, you know how everybody's saying that, man, I wish that I started investing in 2008 when I was in high school and stuff like that. Like now we have opportunity. We're seeing this happen in real time. Do not be that person watching this happen, like complaining and not doing anything. This is the time that you accumulate these assets. When it's on sale, this is when you buy. Okay, there's no more excuse saying, "Oh, I didn't know." There's no more excuse. There's too many people saying it. We're saying it right now. If you're listening to this, you're hearing it. It's time to take action. Please don't be that person sitting on the sidelines.
Exactly.
Don't do
You
it.
can't control a tariff. You can't stop a tariff. But what you can control is how you allocate your own money. All right. So stop complaining about things that you can't control. If you are one of those who are saying that the tariffs are whatever, whatever, you can't do like that as an individual. We can't prevent that from happening. So what to your Cornell, to your point, just control what you can control, right? Don't be that person in 2035 saying, man, 2025 was a crazy opportunity. I wish I got in. Don't be that person. Opportunity is knocking. So do your research. Of course, only invest what you are willing to lose because as investors, we understand the risk that it comes with investing. Um, yeah. And just make sure that you are aligning any type of investment you're doing with your goals, right? We always say that. Like make sure that you have some type of destination in mind. Don't just be throwing your money at a wall and hoping it sticks, right? You got to have a purpose for your money. So, but yeah. All right, man. Cornell, we got anything else for him?
I think we're good. Make sure y'all join the Facebook group and follow us on IG, Investors Playbook LLC,
That's it.
with the at on the beginning of it.
At Investors Playbook LLC. Check out the website www.investorsplaybookllc.com. Um, yeah. All right, man. Well, peace out,
So.
y'all. Appreciate y'all for always listening. We gonna catch y'all next week.